Alright, so let's be honest. If you clicked on this video and you're watching this right now, you're probably tired of guessing, you're tired of not having a proper strategy, you're tired of not having an actual model follow every single day before you approach the markets, and you're just tired of not seeing any results at all. You've been trading ICT for many years now and you're not seeing the same results as everyone else that you see on social media. So that's exactly what I'm going to fix into this video today. We're going to be getting a full rundown of the ICT Unicorn model. That includes a full A+ checklist criteria, meaning you will know exactly what to look out for every single day before approaching the market. That's exactly how we trade. We have a plan to follow every single day. If we see a trade and it doesn't meet the criteria, let's say one of those things from the list is missing, there's no trade. It's as simple as that. A full risk management plan specifically tailored to you. So how many contracts to use, for example, on a 50K account or on a 100K account, we'll be running through every single little thing that you can think of so you actually use the proper risk management and you stay in the game, okay? Because most traders, they oversize, over leverage, and they use way too much risk, hence they blow their account in 1 or 2 trades. And lastly, most importantly, we'll be covering psychology, right? That's a very important aspect of trading, and it's definitely a topic that most traders skip out nowadays. So get your notepad and pen, do whatever you need to do, focus up and lock in for this video, because I promise you this will literally be the last ever video that you need to watch ever again. Let's get straight into it. All right, so starting off, what even is the ICT Unicorn model in the first place, okay? It consists of a fair value gap that is paired with a breaker block. It's as simple as that. Obviously, there's a lot more that goes into it. So we're gonna be going through this PowerPoint and explaining literally everything that you need to know. Towards the end, we'll go over some live trading examples so you guys can get a better understanding. All right, so I've written out A+ checklist criteria that you need to follow. So I would screenshot this, save it for later. The number one thing on the checklist is going to be a liquidity sweep. Price must take out some form of buy side or sell side liquidity. This can be London highs, London lows, Asia highs, Asia lows, equal highs, or even equal lows. Okay, as long as price takes out some form of liquidity, meaning a 15-minute either swing high or swing low, that's fine. Okay, so moving on to number 2 is going to be a displacement. Okay, so a clean and aggressive move higher or lower, of course, depending on the direction that you're trading, displacing back through that level it just broke through or swept. So if we've just swept buy side liquidity, for example, we want to see a displacement in the opposing direction lower. Okay, same thing if we've swept sell side liquidity, of course it's going to be opposite. So we want to see a displacement in the opposing direction higher. Okay, all right guys, just a quick reminder, I have opened up 3 new slots for the one-on-one mentorship program. So if you are someone that's very interested and you want to get your trading to that next level where you're at the stage of receiving consistent payouts every single month, we've actually had a very recent student that has come on and taken a mentorship literally around 3 to 4 weeks ago and has already got to the stage of being eligible for his first ever payout of $5,000. So I will pop up a few screenshots on the screen now. And prior to this, my student John, he had never ever received any sort of payouts, any funding, no results at all. And he's been trading ICT for around 2 years now and had still seen absolutely 0 results. Took on the one-on-one mentorship program. Within 3 weeks, he's already got to the stage where his Express Top Step funded account is up $5,000 and he's eligible for his first ever payout. So this is only the start, many more payouts to come, but I just wanted to share that information with you lot to actually show you that it is possible. And there's also the whole reason why I'm starting this mentorship program is to show you lot it's possible to go from being unprofitable to profitable. So my goal is to only take on around 3 to maybe 5 maximum students to mentor one-on-one, and whoever makes the most money, whoever has the biggest payout, I will personally fly you out to my location, whether that's Miami, Mexico, Dubai, wherever I am, and in return we will make a YouTube video showcasing the journey from being unprofitable to profitable. That's the whole reason why I'm doing this, is to film a YouTube video at the end and grow the channel. So this month's been great. I managed to withdraw another $25,000 payout from Top Step alone. That's not including any other prop firms that I'm with. I've seen many traders online saying that's been a terrible month. They're losing, they're struggling. For me, that's not been the case, right? We're out here winning. We've actually closed the last 5 weeks in a row in profit. There has been a US government shutdown recently, so the price action has been a little bit more tricky than usual. So we've only been taking really 1 to 2 trades a week, but we've closed out every single week in a profit in a row, 5 weeks in a row. So you can clearly see the model, the strategy, it works consistently on a month-to-month basis. We are receiving payouts from prop firms, not only me, but my students as well. So if you are that someone that's very interested and you're sick and tired of guessing, trading different strategies, not being sure when to enter, when to exit, where to take profit, you're just all over the place, okay? If you really and truly want to actually take this serious and you want to have a career in trading, make sure to check out all of the links in the description below and fill out the application form. Moving on to number 3, we want to see a market structure shift. So a clear break in structure for a swing high or a swing low, depending on the direction that you're trading. Okay, this is common sense. If you're bullish, of course, you want to see a break above a swing high. If you're bearish, you want to see a break below a swing low. Number 4, you want to see a fair value gap that's paired with a breaker block. If there's no breaker block, again, there's no entry. If there's no fair value gap, there's no entry. You need both of the P to raise in order for this to be a true unicorn model. So you enter as soon as price taps in to that area, no waiting, you just execute. Okay, that's your job as a trader. As soon as you see your model play out on the chart, you enter. There's nothing to think about. Okay, so your entry is usually going to be on the fair value gap. Now, very, very important, okay, time of day. Only enter during New York session inside of macro times. No random trades outside of key windows. So I've listed some macros down here that I like to trade, which is the 9:45 to 10:15 and the 10:45 to 11:15. Yes, there is a lunch macro at 11:45 to 12:15, but I don't really trade it, and I don't recommend that you guys trade it either because it only works sometimes, and most of the time the lunch hour is very low probability. So I would avoid that totally, and I'll only stick to these 2 a.m. macros. Now, if you want to trade the PM session, it's from 2 p.m. to 3 p.m. silver bullet time. Now, you can trade a macro inside the PM, which is from 1:45 to 2:15. Now, I tend to stick away from the PM session. It does provide good results and good trades that you can take advantage of. However, for me personally, I've just not really had that much success with it. Hence, I've deleted it from my strategy and I only stick to the AM session. Okay, so New York is going to be from 9:30 a.m. to 12 p.m. That is the AM session window. PM is from 1 p.m. all the way to 4 p.m. Okay, and you want to trade that 2 p.m. to 3 p.m. window. All right, and finally, news check. Okay, so make sure there's no high impact or red folder news event at the time of the entry. Okay, if we have a 9:45 a.m. red folder news, you're not going to be entering. Okay, you're going to wait for the news to get released. Wait at least a minute. Okay, after that minute has done whatever it needed to do, okay, you'll usually have a more clear sense of direction, and you can either enter that trade or skip that trade. Also, clean price action, all right, avoid choppy or messy price. For example, if ES and NQ are not correlated, then obviously stay out of the market. Now, what do I mean by that? If NQ has a gap and a breaker block, and let's say ES is not providing a fair value gap, there's no displacement, there's no shift in market structure on ES, of course, there's gonna be no trade, okay? You wanna see everything that you see on NQ, you also wanna see that on ES, okay? It has to be correlated. Now, one last thing that I wanna add here as well, once you enter, where should you target? Okay, you should target either 50% of the current price range, so a premium or a discount. You can also target internal liquidity, things like swing highs, swing lows. Make sure you're targeting at least a minimum of 1 to 2 risk to reward. And you can also target other draws on liquidity, for example, new week opening gaps, equal highs, equal lows, session liquidity like London highs, London lows, etc. The list goes on. You want to target some form of liquidity. Risk management, all right, this is a very important topic. Now, without risk management, guys, you're never going to succeed in the game of trading, okay? You simply won't. You're gonna end up blowing your account, you're gonna end up buying another account, and the cycle repeats itself, right? You buy an account, you blow it. You buy another account, you blow it. So it's very important to stick to this and be very, very strict, very, very disciplined, and follow this religiously, okay? So 1% max per trade idea. That's the maximum you're gonna be risking on any single trade, okay? Big risk equals big emotions equals bad decisions, okay? So you wanna be trading with an amount that you're comfortable losing. Now, 1% is around that benchmark where most people feel comfortable. Anything bigger than 1%, you're gonna be risking a lot of money and most of your account. So you don't want to be in a position where you're doing that, because then you need that trade to play out, and if it doesn't play out, you're going to get emotional, which will lead you to make a bad decision, which will then lead you to blow your account, okay? It's very simple, guys. I've traded nearly 6 years now, and I've seen this time and time again where traders are just doing the same cycle again and again and again. And if you just simply stuck to the risk management plan on a long-term basis, right, you are going to be profitable if you have a good model. Yes, you might take some losses here and there. However, if you have a correct risk management, eventually you take that win and you can recover all of those losses. If you're going to go all in on the trade, right, you've got 1 or 2 trades and that's it. You're out of the game. So stick to this, take a screenshot, save it for later. Maximum 2 losses per day, all right? If you take 2 losses in a row, that's it, you're walking away, you come back tomorrow, okay? No exceptions. I don't care if the next trade is looking very clean, no, does not matter. However, if you take a loss and then you take a break-even trade, then and only then you can allow yourself to take a third and final trade. Now, whatever happens on that third trade, whether it's a break-even, whether it's a win, whether it's a loss, you're walking away on the day, okay? So 2 losses, you're done. 1 loss, 1 break even, you can take a third trade. So if you take a loss, drop your position size and risk to 0.5%. So you stay at half risk until you get your next win. Once you get your next win, then you can bump up your risk back up to the original 1%. This will help you from blowing your account and protecting your capital, right? If you're taking losses, you should not be increasing your risk, right? You should be stepping back, realizing, what am I doing wrong here? And actually reducing risk rather than increasing or staying at the same risk, because then you're gonna blow your account. If you half your risk and reduce and see where you're going wrong and you actually fix those things, and then you put your risk back up to 1%, you're more likely to stay in the game. Position sizing examples, right? This is a 30 handle stop on NQ. So this is obviously the only asset you should be trading with. This strategy is NASDAQ. NQ, that's the only asset you should be trading. Don't trade ES, don't trade any other assets. So for a 50K account example, you're gonna be risking $480 with a 30 handle risk. That's 8 micro contracts. If you take a loss, you drop down to 4 micros. This can be with any prop firm, either Apex, Alpha Futures, or Top Step, okay? Top Step would be the best prop firm that I would recommend that you go with, and this works perfectly. And if you take a loss, you jump down to 4 micros, which obviously would be half of this, around $240 risk. Okay, let's say you have a 150K account with Top Step, then you want to risk around $840, which is 14 micros. If you take a loss, you jump down to 7 micros, which would be $420. Stick to this risk management plan. It works very well. I've been using it for many years now. And if you are going to go with any prop firm out there, I would recommend going with Top Step. All right, and finally, psychology. Very, very important. Key mindset rules. Okay, I know it sounds easier than it is, but you need to detach yourself from the money aspect, okay? Stop obsessing over profits, focus on building good habits and becoming a better trader, right? So if that means sticking to your risk management, even though you wanna go all in so bad, stick to your risk management because you're gonna be building good habits. The more you practice that, the more likely you're gonna stick to it, okay? And overall, you're gonna see better results. Again, if that means waiting for your model to actually show, right? Wait for your model. Don't take a random setup if it's missing a fair value gap or a market structure shift or correlation on the S, okay? Make sure everything's aligning, make sure everything is A+, and then take the trade, okay? So always, always, always remember this, guys. Focus on building good habits on the chart. If that means you have to journal, that means you have to stick to risk management, practice those habits, because when you do all of that, you're naturally going to become a better trader, okay? And what is that going to result in? If you become a better trader, you're going to make more money. It's as simple as that. Trade less, win more, okay? A+ setups only. If there's no setup, there's no trade. Don't bother taking B+ setups, C+ setups, right? Only take A+ setups, meaning everything on that checklist that I provided you in the start of the video is on the chart, okay? If one thing is missing, do not take that trade. The less you trade, the more money you're gonna make, okay? The past 5 weeks, because of the US government shutdown, I've only been taking around 1 to 2 trades a week. And guess what? I've closed every single one of those weeks in a profit, 5 weeks in a row, okay? You don't need to be taking 10 trades a day. The less you trade, the more money you make. I know it sounds opposite. Trading is the only career path that this applies, because any other job out there, the more you put in, the more money you're gonna make. With trading, is completely different. This one's very important. Accept the risk, okay? Before you enter the trade, accept the loss in your head, right? If it loses, it's not gonna disappoint you because you've already seen it coming, okay? Compared to the trader who has not done that, he doesn't accept the risk, right? If he then takes a loss, he's gonna get so emotional, he's gonna start revenge trading, he's gonna start emotionally trading, right? So please, please, please accept the risk before you enter the trade. That way, you've already taken that loss in your head before it's happened, okay? And if that trade ends up winning, you're gonna be even more thankful, right? So overall, psychology is gonna be on point. Journal everything, okay? Patterns repeat. you're gonna review your wins and your mistakes. I know journaling sounds very boring, right? But you have to do it, okay? That's the only way you're gonna see where you're actually going wrong. With self-reflection, you're gonna see, okay, I'm doing this wrong, I need to change this, I need to change this, right? Once you figure those things out, that's when you can finally start to see profitability come in. All right, guys, so we've literally covered everything that you need to know. Now, I'm gonna be jumping into some live trading examples. I'm gonna be showcasing you this model actually playing out in real time so you can get a better understanding. Let's jump straight into it. All right, guys, so starting off with the first example. Number one, what are we looking out for? We're looking for a liquidity sweep. So you can clearly see here, right? This is NQ, okay? Price comes up, we had swept buy-side liquidity. Okay, so this is a swing high. This acts as a buy-side liquidity pool. If we actually zoom out to the 15-minute time frame as well, we can see that price is tapping into a 15-minute bearish fair value gap, which is actually a form of a liquidity sweep as well. So if we zoom in on the 1 minute time frame, you can see price came up, it had swept this liquidity level here, right? And actually, fun fact as well, you can see on ES, this is the high that we swept on NQ. We had actually not swept that on ES. So we have a bearish SMT divergence, which is actually good, right? It goes in our favor. So we sweep buy side. What are we looking out for next? We're looking for a displacement lower in the opposing direction. Now with that comes a market structure shift. So you can see here, right, this is a swing low. So we want to see price break below that swing low with displacement and then create a fair value gap. So what do we get next? We get displacement below, we break below this swing low, we also break below this swing low here, and we create a fair value gap. So there you go, we have a fair value gap, which is also paired with this breaker block here. And notice how the breaker block and the fair value gap is actually overlapping each other, right? So it's in the same area. That's exactly what you want to see. What is a breaker block? All a breaker block is, right, is a swing high followed by a swing low, followed by another swing high, followed by a lower low, okay? Once that lower low comes in and breaks below, the lowest down close candle in this price leg here is gonna be your breaker block, okay? So all it really is a failed order block, you can call it that. Now, you wanna have your entry at the fair value gap. Stop loss goes above a swing high. Now, the maximum you should be risking is around 30 handles. So in this case, we can afford to put our stops above the swing high here, okay? So what are you gonna target? You're gonna target the opposing liquidity, which is down here. This is sell side liquidity. And you can also even take a partial at this swing low here, right? So as soon as price takes out this low, you can close off a little bit of your position just to reward yourself and reduce risk. You would then move your stops to the swing high that's actually inside of this fair value gap, risking one handle. So your stops are pretty much at break even at this point. You've taken a partial and you ride the rest towards the draw on liquidity, which is sell side liquidity. And as you can see here, we're also inside of the 10:45 to 11:15 macro, okay? So notice how the entry was exactly at 10:47, okay? It's very accurate, the strategy that we trade. And you can also see everything that I'm watching on NQ is looking exactly the same on ES. So you can see here, we had the displacement lower, we had the shift in market structure, we have our breaker block, we have our fair value gap, we have our entry, and we also have our draw. Okay, so everything is correlating and looks the same on ES. Okay, so this is a very good example. Now we're going to jump into one more example, which is going to be a bullish scenario. All right, so getting into the second example, what's the first thing we're looking out for? We're looking out for a liquidity sweep, a swing low that's going to act as a sell side liquidity level. We can see price has come down, it has swept sell side. Great stuff. Let's have a look at ES. Has ES done the same thing? Yes, it has. Okay, so that's out the way. Number one, we've had a liquidity sweep. What's going to be number two? We need to see a displacement on both assets. So let's skip this forward and see. We've seen a displacement higher. Okay, now what comes with a displacement higher? It's going to be a market structure shift. Okay, you can see the swing high here. We've actually broken through on both assets. So we've had a displacement higher, had a market structure shift, and we've also had a liquidity sweep. Great stuff. What are we looking out for next? We're looking for our entry model, which is going to be fair value gap, which is also paired with a break block. So you can see here, we have these two up close candles, which are a failed order block. If the candles are consecutive, meaning there's two up close or two down close, you're going to mark both of them out. So this will act as your breaker block. You can see here, swing low, swing high, followed by a lower low, followed by a higher high. So this candle here took out all of the sell stops, and then we get that final real move that actually is starting to go higher, meaning we get that higher high, we close above the swing high, and a breaker block is formed. So you can see there, we get a very clear fair value gap. And again, notice how the gap is overlapping perfectly with the break block. It's in the same area. That's exactly what you want to see. Next thing what you want to do, you're going to have your entry at the edge of the fair value gap. Stop loss is going to be a fixed 30 handles. So yes, it is better if we have our stops above a swing high or below a swing low, but the minimum placement has to at least cover the imbalances. So in this case, it's covering the imbalances. That's completely fine. And we'll have our first TP at internal liquidity up here, and final TP will be all the way at external buy side liquidity up there. So let's see if we get an entry. Okay, so you can actually see we've had another fair value gap. So most people will ask me, you know, Ben, why would you not enter on this gap here? Why be entering at this gap? Simply because if we enter up here, we don't have a valid stop loss, okay? We cannot cover all of the imbalances risking 30 handles. If we can't do that, again, it's not valid, not a trade that I would be interested in taking. Second thing, if we enter here, right, the risk reward is going to be off, okay? Because our first TP is going to be here, our stops all the way down there. It doesn't make any sense. And the last and final thing, you can actually measure this price range, right? From swing low to swing high, you can measure and figure out whether we're in a premium or a discount. So hence we're going long, we want to pick the fair value gap that's resting us up a discount. All right, so we'll be entering off this gap here. See if we get entry. Yes, we do. So that is your sign to go long. Okay. There we go, TP1 would have been smashed already. Now, as soon as this swing high gets taken, you're gonna start trading your stops to the swing low. So you can see there, we're reducing our risk. TP1 has been smashed already. Be closing around 60 to 80% of your position off, and you'll be holding the rest towards final TP, which you can see, boom, TP smashed, 107 handles secured. Now, this is actually a trade that I personally took myself as well, and it's a great example to break down in this video. So don't worry guys, we're not just cherry picking examples here. We've actually taken these examples live. All right guys, that's gonna be it for today's video. I hope you enjoyed, but we are coming towards the end of the video today. If you learned something today, make sure to drop a like, leave a comment, share and subscribe. I hope all of you watching got some sort of value out of today's video. Now lastly, if you are someone that's interested in one-on-one mentoring, make sure to check out all of the links in the description below. Fill out the application form. This is literally one of the best mentorships out there on the internet, okay? Especially if you're getting into ICT trading and you're looking for a mentor to guide you one-on-one, right? It's not a group call. It's not a Discord where you just get chucked into. It's literally me and you on a call, 1 hour every single week, breaking down the trades, see what you've done correctly, see what you've done incorrectly, fix the things that you've done incorrectly, and get you to that profitability stage. That is the guarantee and promise of this mentorship. If you are someone that's interested, make sure to fill out the application form in the description below, and I will see you lot inside of the next video. Take it easy.